Joining us right now on the markets, tech, crypto, and her outlook for 2026. Cathie Wood is here, ARK Invest CEO and CIO. 2025 was quite a year, both up and down and back again to some degree. When you look at some of the big holdings that you have, whether it be Tesla, maybe we get into crypto and everything else, where do you think things are headed? And to the extent that there were things that you were wrong about, frankly, in 25, what was the lesson?
Sure. Well, great to see you. Happy New Year, Andrew, Becky, and Joe. So, yes, last year, Morningstar, in the Morningstar rankings, I think we had 3 of the top 5, or 4 of the top 5 were ARK funds top performing. Of course, we had 2 big corrections. We had the trade turmoil in April. That was an amazing buying opportunity. And what we do typically is concentrate towards our highest conviction names when we have an opportunity like that. We did that. Same with the government shutdown. That was a little less severe. What did we learn? Well, one of the things that we've learned over the last few years is we can see inflation coming down clearly, but in the reported numbers, it is stuck. And I think a lot of people are wondering, wait a minute, this market is near record high valuations. How can this be? This is a setup for a correction. And we're looking at other periods in history. If you look into the 90s up to 97, I think it was, and in the 2000s, the early 2000s, we had very strong markets as the multiple moved down. So what does last year teach us? We must assume that valuations are going to compress, and we do. We do that in our bottom-up analysis for every company. But we're pretty excited about the inflation outlook thanks to oil prices, housing prices, big time. You see the home builders, KB Home, cutting its prices by 7%. And others following, and productivity gains, unit labor costs coming down dramatically. I think on a year-over-year basis, they're up 1.2%, but the last quarter reported they were actually negative. So there are a lot of deflationary pressures, and the last one I'll cite is technology. Our focus is exclusively on technologically enabled innovation. And in each of the 5 major platforms, robotics, energy storage, artificial intelligence, especially blockchain technology, and multi-omic sequencing, healthcare, I saw the CEO of Bio, very good. Those are all very deflationary in their impact. So pretty excited. We think the surprises are going to be on the low side of inflation expectations.
Tesla has always been one of your big holdings. In terms of just sales, obviously things have been challenged, but there's a lot of excitement about autonomy. There's a lot of excitement about the Optimus robot. What is your sense of where things stand at Tesla right now?
Yes, the EV sales environment has been challenged, but the market is shifting its focus to the robotaxi opportunity. So we're moving from 15% gross margins in autos, the hardware, to more of a SaaS model where robotaxis, recurring revenue model, is those margins are more in the 70s and 80s. And I think as analysts understand that that's where Tesla's going, and they start building in the model for robotaxis, they see a tremendous opportunity. So it's been interesting to me to see upgrades, even by some auto analysts, now that they're beginning to understand that this is not an auto company. Maybe they're working with their tech analysts and understanding the stock a bit better.
So when you think, though, about autonomous robotaxis and you think about robots, what does that look like? And is there an argument? Look, some of the critics would say, cars aren't working the way they're supposed to be working right now in terms of what's happening with the EV market. And some of these other ambitious efforts are going to take a long time to get to a meaningful escape velocity.
Well, we're keeping an eye on how quickly Tesla's footprint is expanding here. And it's expanding a lot faster, I think, than many people expected. And it's interesting to watch Waymo as well. We draw in Texas. We draw the footprint, and they're competing with each other. Competition is a good thing. So I think this is actually going to happen faster than most analysts think. In terms of the proliferation of robotaxis, especially if we get more federal legislation instead of just state by state. On the Optimus robot side, there's a lot of excitement in robotics. That in the private markets has been a huge space this past year. We look at an Optimus robot. Our chief futurist, Brett Winton, working with Sam and Daniel, have concluded that an Optimus robot is going to be 200,000 times more difficult to get working correctly relative to a robotaxi. So you'll have waves of Optimus improving with time, but full human is going to be quite difficult. Nonetheless, the robots that we're seeing, pick and pack and
right.
lifting things, they're starting to make waves.
Should we talk about Bitcoin? Well, we can talk about SpaceX. I mean, that's going to probably go public this year. What do you think it's going to go public at?
Well, this next round is about $800 billion, so a near doubling. And we wouldn't be surprised to see it become the first $1 trillion company. And especially now that there's a new opportunity, data centers in space, to avoid all of the not in my backyard obstacles that Tesla and others are facing. So we're starting to do the modeling work on that.